This is not financial advice. I'm recording my thoughts about Palantir stock. Is Palantir stock the next Tesla, Enforce or Salesforce? Are we missing out on a 10x by not investing in Palantir stock right now? These are the questions I'm going to answer in this video. Before I move into this video, please note that you have to watch this from the start till the end for it to make sense. If you watch it in bits, you will not understand what I'm talking about. Ever since Palantir reported second consecutive quarter of GAAP profitability, and with the recent AI hype, the stock is up about 45% in the past 1 month, and it is currently trading at about $11.7. Everybody did not want to buy this stock when it was at $7.5, and now that it shot up to $11.7 and people want to buy it. An analogy that I can think of is people did not want to buy Bitcoin when it was trading at $9,000, but when it shot up to 50,000 plus, and everybody wants to buy it. And now it dropped back to 25,000 and nobody wants to buy it. So everyone will face a similar dilemma with respect to stocks or crypto. So in this video, I'm going to talk about my personal strategy, which I call as camp strategy, to face situations like this. We'll first start with the facts about Palantir, and then why there is hype about this stock again. We'll talk about its valuation giving multiple scenarios, and then finally I will give out what to do using that camp strategy that I was talking about. Let's first talk about the facts. Palantir stock has a market cap of about $25 billion at the current price of about $11.7. The revenue for the past 12 months is about $2 billion. So that's a price to sales of 12.5, which is expensive. With respect to revenue, this company has huge deceleration in revenue. This year, they are saying they can make about $2.23 billion of revenue, which represents only 16% revenue growth. It is less for a stock this expensive. Now let's move on to the share dilution. Palantir is known for high stock-based compensation, and they are diluting the shareholders significantly. Look at the number of shares in Q1 of 2022. They were about 2 billion, and just a year later, by the end of Q1 of 2023, they have 2.2 billion outstanding shares. That's 10% dilution year on year, which is very significant, and that's going to hurt the shareholders. Finally, Palantir has about $2.9 billion of cash and cash equivalents, and they are already GAAP profitable, so we can rule out the danger of it going bankrupt. In conclusion, we have an expensive company with a price to sales of 12.5. That's growing really slow, about 15% year on year this year, and has been diluting the shareholders significantly, 10% dilution this year. The positive point is they have a real product, the retention rate is high, and they have no danger of bankruptcy. Now let's move on to why the hype is back. The hype is because of the AI platform that they have launched, which is expected to significantly increase their revenue in the coming quarters. Palantir does have some challenges. That's the reason why the revenue growth has stalled. Palantir do have an expensive software. They're not a plug and play. You have to integrate the software into their clients' other softwares to actually see if there's a potential for any value. So that's the big challenge, and the current macro environment is not helping them. Now let's move on to the valuation and the camp strategy that I was talking about before. In the valuation, I'm going to show you 3 scenarios. One is a reasonable scenario, second one is a 5x scenario, and third one is a 10x scenario. You have to pay attention to all these 3 scenarios, and you have to vote for which scenario you do believe in. Based on that, we will decide whether you are in camp 1 or camp 2. So let's now move on to the reasonable scenario. We do know for 2023, Palantir is saying they can make about $2.23 billion of revenue on the upper side. So we'll give them benefit of doubt and say, okay, they can make $2.23 billion of revenue in 2023. In 2023, they're only saying they can grow their revenue by about 15%. But I'm optimistic about this company, and I think they have a real product. So I'm assuming 25% year-on-year growth for the next 5 years, which I think is optimistic. Yes, we do have the AI hype, but I think 25% is already optimistic. With that, they can make about $5.5 billion of revenue. Palantir's gross margins are in the order of 80%, so getting 30% net profit margin is not difficult. So with a 30% net profit margin, they can make about $1.6 billion of net income in 2027. I'm applying a premium multiple of 30, with which this company would be worth about $49 billion. Currently, Palantir has about 2.2 billion outstanding shares, and in the recent year they diluted the shareholders by 10% year on year. But I'm only assuming 4% dilution year on year because they're saying the stock-based compensation is coming down in the coming year. So 4% I think is reasonable, with which they will have about 2.67 billion outstanding shares. When I divide the 49 billion market cap with 2.677 billion outstanding shares, I will get a price of $18, which I think is reasonable. Currently the stock is at $11.66, right? So that gives us a 50% upside with reasonable assumptions, and that's not very attractive. Let's move on to the 5x scenario. For this company to have a 5x with respect to fundamentals, they have to grow their revenue by 56% year on year continuously for the next 5 years. And I'm keeping the net profit margin at 30%, and I'm assuming that people will pay a multiple of 40, and that's when the price would be close to $60. Right now they are close to 12, right? That's a 5x. So for Palantir to do a 5x, these are the assumptions: 56% year on year growth and a 40 multiple. Remember that they are saying they can only grow at 15% in 2023, and we are giving it a stretch and saying 56%. Is this believable? If yes, you belong to camp 2. If you believe in the reasonable scenario, you belong to camp 1. Let's now move on to the 10x scenario. In the 10x scenario, they have to increase their revenue by 80% year on year. People should be willing to pay about a 50 multiple, which is a big stretch, but this is what has to happen for them to get a 10x. So 80% growth year on year for the next 5 years, when the company only is saying they can grow at 15% this year. But if you are a believer of this 80% growth year on year and a 50 multiple that people would pay, then 10x scenario is possible. The stock would be at about $130. Currently it's close to $12, so that's about a 10x in 5 years. Now, based on what you believe, you will be divided into 2 camps. If you believe in the reasonable scenario like me, you will be in camp 1. If you believe in the 5x or 10x scenario, because you are very optimistic about the AI, you can join the camp 2. I'm going to show what to do if you are in camp 2. And I've used this camp strategy when I got a multi-bagger with Tesla, and I was in camp 2 at that time. We'll move on to that later, but let's now talk about camp 1. Camp 1 are the believers of reasonable scenario, that's me. So I've put 3 bullet points for camp 1, and you have to see which one is applicable to you. In the first one, if I have significant position, I will sell 50% to book my profits. Number 2 is if I don't have a significant position, I'll stay put. And this is me. In full disclosure, I do own Palantir at about $7.435. If you have followed my portfolio, you already know I own Palantir at about $7.43, and it's not a large position, so it's not going to make or break. So that's why I'm going to stay put. By the way, if you want to have a sneak peek on my portfolio, if you have not seen it before, just pause and see the cost per share and price. Otherwise, let's go on to the third point. In the third bullet point, I'm saying that even though I believe in the reasonable scenario, I'm going to follow this stock. Maybe they will reaccelerate their revenue to like 35 or 40%, in which case the stock price will appreciate to close to 20. At that time, I will buy the stock at $20. Yes, I will not get a 5 or 6x, but I will get a 2 or 3x. So I'm not missing out on the upside. The upside that I will get is limited, but I'm waiting for them to actually show execution. So if you are a believer in a 5x strategy in which you are thinking this can get to $60 in the coming 5 years, you can buy at $12, but I will buy at $20 when I see some execution. But I'll still get that 3x because you are saying that it can go to $60, right? So my upside will get limited, but I'll still get a multi-bagger, but with lesser risk. Now let's move on to camp 2. These are the believers of the 5x or 10x scenario in which you believe that 56% year-on-year growth for the next 5 years is possible and that they can get a 40 multiple in the 5x scenario. In the 10x believers, you are saying that this company can grow 80% year-on-year for the next 5 years because their revenue is going to explode because of this AIP platform, right? And people are willing to pay about 50 multiple. That's what you are believing if you are in camp 2. So if you are in camp 2, I have included 2 bullet points. Number 1 is, if you have money, look for the upper limit of your tolerable loss, maybe twice your salary. For example, if you can lose $5,000, and that's the upper limit of what you can lose without crying. So put that money into Palantir at this price. This company is not going to go bankrupt. We do know they can get to $17 with reasonable assumptions in the next 5 years. So worst case, your upside will be 57%. And in the best case, you can get your multi-bagger. But this is a good way to get a good chunk of Palantir shares and be prepared for that multi-bagger. The downside is limited because this is a solid company, good cash position, but your upper side could get limited, but the risk is minimal. And if you don't have $5,000 or so, then you can look for a $12 strike with January of 2025 expiry date. That's 1.5 years from now. And if you buy a $12 strike price, it's currently trading at $395 per contract. So the break-even price is close to $16, and every dollar it goes above $16, you would make $100 for each dollar appreciation. For example, if you buy one contract and Palantir gets to $30 by January of 2025, you would make $1,400. If you don't have a lot of money, one way of playing it is by buying the calls. That's it. If you are in camp 1, you know what to do. If you are in camp 2, you know what to do. And now let me talk about my personal journey with Tesla, in which I was faced with the same dilemma as Palantir before. At that point of time, Tesla was extremely overvalued, and I believed that it can do a 5x or 10x, but with a lot of fear, obviously, because anything can happen. I can lose a lot of money, right? And since I was in camp 2, I did put about $7,500 back in March or April and May of 2020. You can see the transactions that I bought. The first share that I bought was at $514. Look at the second row, March 30th of 2020. And keep in mind that this is before the split. So I bought 3 Tesla at $514 each. That 3 Tesla is about 45 shares now because they had 2 splits. So my average cost of this $7,500 is close to $50 or $60. And needless to say, I got a multi-bagger with this. And with the $7,500 I had, I bought close to 12 shares of Tesla at that time, pre-split. So post-split, they would be about 180 shares. But I still got a multi-bagger using this camp strategy. By putting $7,500 in Tesla stock back in March of 2020, I definitely did run a risk, but I knew that the downside is limited because EVs are the future and Tesla has compelling products. So that's the reason why I put money in Tesla, and $7,500 was my upper limit of how much money I can lose and not cry. So that's what I did, staying in camp 2 for Tesla. Let me know your thoughts in the comments. Thank you so much for watching.